As a new trader, it's really easy to get lost with all the thousands of content that's on YouTube, and you only really need a fraction of it. In this video, I'm be going over 5 beginning concepts that an indicator that will get you from only seeing floating candles to breaking down areas of the market and accurately follow big money. These should be very easy to follow through, and I actually do help some struggling traders who don't know what they're doing or are just struggling in the markets to actually making their first couple of bands or actually start seeing money every single month and reach profitability. And the thing is, it shouldn't really be taking years to actually learn this. A lot of people overcomplicate it, and a lot of people just learn the wrong things, and a lot of people have the wrong discipline. And if you want, you could also book a call with one of my team members, so then you could get onboarded so you create your own personal program that will guide you to profitability and learn the proper information and efficient. Without further ado, let's get right into the video. What's up, guys? Today I'm be going over the 5 beginner confluences to learn. This video is going to be solely focused on chart analysis, right? Because in the beginning, you guys are obviously going to have your charts looking like basically like blank as fuck. You guys don't know what the fuck you guys are looking at, right? Obviously, you just see just movements going up and down, right? When you actually like learn chart analysis, then you can eventually break down your charts to something like this to actually catch the actual move, right? And actually catch better trades and more efficient and accurate trades and get a better idea where price is gonna end up going, right? So yeah, let's just get straight into it, right? The main objective obviously is at the end of this video you should have a way better idea what you're looking at, right? No bullshit, right? Of you just being like, "Blah, blah, blah, I think it's gonna go up, I think it's gonna go down just because. No, you're gonna actually learn real confluences and confluences that I personally use to actually read the markets, right? Before I get into anything, right? So what basically confluences are, they're just reasons why you're gonna enter a trade or reasons why market's gonna move like a certain direction. Or if we react a way or if we react a certain way to these confluences, then that's where we could decide whether we want to go long or whether we want to go short, right? So as of right now, I kind of want to explain what market levels are. It's just a way for you to read where we're getting bought up and where we're getting sold off, right? So obviously market levels by itself isn't really like a strategy like that, right? Um, a lot of people that know how I trade, you guys see that I don't have any like too like many levels on my chart, right? But again, this is just where the stock is being bought, right? So obviously for long-term investing and me, I also long-term invest as well. I know where price is getting bought up. I know where to buy and I know basically where to sell, right? I'm gonna show you guys an example of this stock where I made almost 50% in return within 3 months, right? And yeah, so basically let's go over market levels, right? So right here we see that we have well, yeah, market moving up, market moving down, right? Eventually we come up and then come down, right? Whatever, right? You guys see like these like little points, right? um Fuck. Yeah, see these little points like right here, 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 right? So for a while we were just kind of rejecting off this area, right? So then this is our resistance, right? And then we come back down to what? Our area where we get bought, right? This is the area where we get bought. So this is our support, right? So what support and resistance is again, support is basically um the area where we're supporting our structure, right? And resistance is just the resistance where we're resisting to basically continue higher, right? And then once we push above the resistance, right, this resistance now acts as support because now this is the area where we want to hold and continue to go higher, right? And now this is support, right? And obviously when we're under it, now that's your resistance, right? And then we are basically back to support, right? And then once we break support, then it's your resistance, yada yada yada. It basically kind of switches when we're above it and when we're below it, right? So right here we have levels here too, and then right here we have levels here too, right? Just because we see that we reject in these areas, right, and we get bought up in this area, right? And then sometimes we break underneath this area, right, and then target the previous support, right? And we can make a new support, right? Right here we eventually came back down, right? And then we saw that we were getting bought up again, create a new floor, right? Sometimes, yeah, people be saying floor is ceiling because every single time you break down a floor, right, that floor ends up becoming your ceiling, right? So let's say this is your house, whatever, right? So let's say you have your main floor here, and then when maybe like some fucking, I don't know, your fucking Hulk or whatever, and he fucking smashed through your fucking floor, right?
and then you're like in your basement, right? Your basement obviously has a ceiling, which was your previous floor, right? Say you have an attic, right? So I honestly, I've never seen an attic in my life. That's some rich person shit. Um, but yet again, I grew up fucking broke as shit, right? But if you're white, right, you obviously probably lived in like a home where they have basements and they have attics, right? Um, yeah, so obviously when you when you're on your floor, right, your attic is your resistance, right? Then you go up to your attic to basically see shit. Yeah. All right, I'm kind of going off topic here, right? But yeah, basically this is market levels, right? You're understanding where price is getting bought up and where price is being sold off. So then you can have an idea where to buy and where to sell, right? So let's actually put this in like real fucking like trading type of shit, right? So let's actually kind of go on the daily, right? We start off on the higher time frames and work our way down, right? So this chart you guys are probably seeing like hella chop, right? But yeah, we actually have our areas right here, right, where we get bought up from, right? And this was actually like a previous resistance, a resistance too, right? Resistance, 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 right? This. All right. So then we mark this as a level, right? And then we also have basically right here too area where we got bought up from, and then this also got rejected. We could kind of just like mark our areas kind of like this, right? You could use these dots as well to kind of help you and pin like where shit is being like sold off and shit is being bought off. Right here we see that high. Then we also see like kind of like this shit right here too. And again, these are just areas, right? So I don't want you guys to like take trades exactly like at those fucking points, right? Like maybe it gets into your line and then you're like, "Oh shit, like we're gonna reject here," right? That's not the whole point, dumbass, right? The whole point is this is the area, right? Like pay attention, right? Pay attention how we react here, right? Pay attention how everything's moving here, because more likely or not, we're probably gonna like see some sort of uh reversal or break with hella volume and then just hold, right? Right here we also see another one here. And then obviously I kind of row hella fucking dots. I just get rid of these circles. I honestly don't do this shit. Again, this is just kind of like for you guys to understand what I'm looking at, right? And looking at these points and then just kind of lining them up, right? Because that's basically what it is, right? You're just lining up these like little dots, right? You're just kind of like doing that shit and then just lining them up, kind of like a coloring book or whatever. And then you have like good levels, right? And this is where I actually bought hella fucking shares of Nvidia, right? I bought shares all the way down here at $100, right? It actually went all the way to like $80 per share, right? It went all the way to like 89, right? But since I knew this was an area where we got bought up, right? I decided to buy hella fucking shares, right? And then from here, it went from $100 a share all the way to 150, right? And this is an area where we get rejected, so this is where I actually sold. Um, Not all my position, right? But I sold like half of my position, right? Because again, I'm trying to hold long term investing. We could potentially like hit 170, right? Potentially 200, but after having a long run up, I eventually kind of want to see market kind of push down a little bit, right? And then so I could get better fills on my shares and then continue higher, right? So basically, that's what market levels are, right? Um, we basically move level from level, right? We enter in our support, right? And if we break it with volume, we retest that previous support, which was now resistance, right? And then we go lower, right? And then basically move level from level, right? And yeah, that's basically market levels. All right, and now this is the most important one, right? Basically trends, right? You gotta know which direction you're actually going into the market, right? We don't want you, or I don't want you basically fucking predicting shit. I don't want you basically like predicting where we're going, right? If we're uptrending, right, then we're gonna wanna move up, right? We wanna move with fucking big money, right? If we're downtrending and if we're basically going down, then why are we trying to go up or why are we trying to predict it when it's a clear sign to the downside, right? And then obviously we have our market structure shift, which is our third confluence, right? What a market structure shift is basically just when we're getting signs of where we're actually going to change direction, and then that's when we could actually play the opposite direction, right? So what is an uptrend? Basically higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? Basically you're creating these higher highs, which is these points up here, right? So higher highs, and then you got your higher lows, and that's basically what uptrending is when you continue to create these, right? And inserting your higher lows and your higher highs. You're basically want to keep breaking these points too, and that's how you know you're continuing to trend, right? Just by keep breaking these points, these higher highs, and yeah. Now let's go over a downtrend. Basically, this right here, just the opposite way, right? So we're actually creating lower highs and then lower lows, lower highs, lower lows, lower highs, lower lows, right? So right here we have a lower high, and then right here we have a lower low, right here we have a lower high, lower low, and then lower high, right? So to continue the downtrend, you want to keep breaking these lower lows, right? These are actually called break of structure, right? So this is just you breaking structure of the lower lows, right? And then obviously, um, eventually we're gonna stop creating lower lows, and then eventually we're gonna start breaking lower highs, and that's actually market structure shift, right? And I'm gonna be going over that right now. All right, so basically now we're gonna go over how we could tell when market structure wants to actually just reverse, right, or when the trend wants to reverse, right? So basically, this is how you could spot signs of weakness of the trend, right? So let's just kind of start off from an uptrend to a downtrend, right? So uptrend reversing to a downtrend. So let's create our uptrend, right? We're coming up, coming down, coming up, coming down, coming up, coming down, right? Eventually price gets tired of like just continuing up, so then we're gonna see some shit like this where like we stop breaking the higher high, right? And then sooner or later we're probably just kind of like moving like this, right? But once we actually start breaking the higher lows right here, once we start breaking these points, right, and we stop creating these higher highs, that's a sign of market structure reversal, right? But we actually have our market structure shift right here, right? So we have a candle close underneath here, right? And that is our market structure shift when we actually break the previous swing low, right? Swing low is basically kind of like this, right? Where we're just kind of like, it's the most obvious low, right? So again, this is a higher low that's been broken, and then that's just a sign of market reversal and market structure shift. Again, it's very important to have a candle close under the previous higher low, right? And this is how your shit's gonna look like, right? Right here we see we tried coming back up to see if we could break this higher high, but we couldn't, right? So then this is just a clear sign of just market reversal and change of direction, whatever, market structure shift. Then don't overcomplicate it. There's a lot of ways to say this shit, right? Um, but yeah, now we're gonna go downtrend to uptrend. All right, so now we're basically going to be going over market structure shift from a downtrend to an uptrend. Basically, what this is just when we're coming up, coming down, coming up, coming down, coming up, coming down, right? We stop creating these lower lows, right? And then we start trying to like break these higher lows, right? Your market structure shift would actually be right here, right? So once you break this higher low, that is your indication that we're probably going to reverse, right? And then if we don't break this previous low, or we stop creating these lower lows like to continue lower, right? You could create lows like this, right? Obviously, but like the one I really want to just like not break at all would be this one right here, right? Um, because once you form your market structure shift, right, we want to start creating higher highs, higher lows, right? So right here we insert this higher low, and then we want to push higher, right? And then we're gonna find our support, right, to actually validate all that shit, which is our fair value gaps, and I'll show you guys what that is in a minute, because we, every single time we retrace down, right, we are retracing to our support, which is our fair value gaps, and I'll just show you guys what that is in a minute. But yeah. Here we could kind of see like the obvious market structure shift and basically the whole trends and shit, right? Right here we see we're coming up, coming down, coming up, coming down, coming up, coming down, and then we come up, right? And then we come back down, we actually break these lows right here, right? We break these lows and activate our market structure shift, right? And once that's activated, now we're trying to look for something or like a retracement back into here, right? And again, I'll show you guys where we possibly retrace to. In this case, this was like probably like a fair value gap or inverse of a fair value gap, right? And then we also want to see that this previous high right here, right? So the last higher high that was inserted, we don't want to break above this shit, because once we break above this shit, then we're gonna continue to trend to the upside, right? But yeah, right there we have our market structure shift, and all we do is just come back to this area, retest it, and then break the previous higher lows, right? And then we just come up, come down, come up, come down, come up, and then come down, right? And then again, eventually we're gonna stop coming down, right? And this is where we see market structure shift from the upside to the downside, right? So I mean from the wait, a market structure shift from the downside to the upside, right? So we come down, come up, come down, come up, come down, right? And then we have like our obvious like market structure shift, like literally like somewhere right here, right? And right here we stop inserting the lower lows, right? And then we come up, come down, come up, and then we break this, activating our market structure shift, right? And then from here we take a while, right? We just take a fucking fat minute, but eventually we kind of just continued high, right? Um, and yeah, so right here was our market structure shift, right? And we made sure that market did not form any lower lows, right? So this is basically a market structure shift from the downside, basically to the upside. Again, you want to get candle closes above the previous lower high that was inserted, right? To actually get that market structure shift from the downside to the upside. But now I'm gonna be going over liquidity sweeps and fair value gaps. And what a fair value gap basically is just like a three candle formation, right? It doesn't really matter what color the candles are, right? You could tell if it's going up or down just by the way it's moving up, right? So what a fair value gap is basically just the top wick of the first candle right here and then the bottom wick of this third candle right here. See how you guys don't see this kind of like lining kind of like crossing within each other on the second body, right? This kind of like forms like this little gap on the second body candle or on the body of the second candle in the middle, right? So this is an imbalance. This is a fair value gap, right? Um, Say if your shit kind of looked like this, right, where like they were actually crossing, then there would be no fair value gap here, right? Um, yeah, so your fair value gap would actually be like this, right? And this is an example of a bullish fair value gap where you want to see price either retrace down and continue higher, right? But this is where I'm going to teach you what a liquidity sweep is, right? So there's also another thing called inverse fair value gaps, right? So I'm going to teach you what an inverse fair value gap is, and basically is when we actually come down to this fair value gap right here. And if you have a candle like this, right, where you have a solid candle close, right, it could be just like this, or it just has to be a candle close underneath the fair value gap. That creates an inverse fair value gap, right? Um, Sometimes your gaps will kind of look like, or sometimes you could retrace into a bullish fair value gap and it might look like this. This is still a bullish fair value gap, but once you get like that candle close like this, then that's considered an inverse fair value gap, right? And typically with these, you want to pair them up with a liquidity sweep. What is a liquidity sweep? Basically, previous highs and previous lows, right? So, for example, let's actually kind of like come down to the chart right here, right? So what liquidity sweeps actually are is just literally the highs and lows, right? So liquidity is everywhere. There's liquidity here, right? Liquidity here, right? Then there was liquidity here, right? That got eventually taken out, right? It's basically the highs and lows, right? And usually you want to see like usually want to see like a sweep, then an inverse of a fair value gap to actually play the downside. So let's say price was like up here, right? Like this was price before, right? And we had like this high marked out, right? Say we eventually came back up, right? See prices coming back up. We swept this high, right? For this to actually be like a confirmation to the reversal, you want to see this fair value gap, this bullish fair value gap get inversed, right? However, if you want to see like the upside, right, you want to enter here and like continue to the upside. How do you know if it's gonna continue higher or continue lower? You honestly don't know that as of right now. All you really have to kind of do is just play within your setup, right? Because if you were to long this, saying that you want to continue higher, you want this bullish fair value gap to basically respect itself, right? You want it to respect, right, and continue higher, push up, right? However, if you want that liquidity sweep reversal type, basically what it is just a sign of reversal, right? Where you see the change of direction, right? You take a high, insert the new high, and then target lows, right? That's basically how market moves. And from here, we could have got a fair value gap, right? And if we want to inverse it, right, then we already got some confirmation to go to the downside, right? All we really got to do is possibly pair it up with like a market structure shift, right? Wait for this market structure shift to actually validate and then come back down, retest the inverse fair value gap, and then continue lower, right? And you can confirm it's a liquidity sweep just by waiting for the fair value gap to basically inverse. Otherwise, if this inverse fair value gap respects itself, right, then you're just gonna continue seeing price move up higher. All right, so now we're gonna be going over liquidity sweeps, basically from the downside to the upside. So basically, now we're gonna look at this bearish fair value gap, right? Because this is what you're gonna see when market is moving down, right? You're gonna see bearish fair value gaps forming, right? So you're gonna see the bottom wick of this first candle right here, and then the top wick of this third candle right here, right? And then you can see again, you can see a gap in between, right? The body of the second candle, right? So we have a gap here, and this is a bearish fair value gap. And what a bearish fair value gap is basically a gap or an imbalance, right? People say, however, right, where you retrace to, right, come inside and continue lower, right? Obviously, you have to pair it up and wait if you really want to see that reversal to the upside, right? So if you pair it up with the liquidity sweep, right, then you're gonna want to wait for this fair value gap to basically inverse, right? Get a candle close above, and then you could play some upside, right? So then once you get a candle close, this fair value gap is now considered an inverse fair value gap, right? And you could enter in your trade right here, or you could wait for a pullback down, right? And then continue higher, right? However, if this fair value gap never got a candle close, right? If you see this fair value gap just respect itself, you could continue lower, right? And this liquidity sweep, you're just gonna have to wait for the next low to be swept, right? Obviously, this was a previous liquidity sweep as well, right? So then we could call that as well a liquidity sweep. You take two lows. All you got to do is just wait for the next one to basically get swept, and eventually you're gonna find a bearish fair value gap where you inverse, right? And then you're gonna probably see more support develop itself, right? Because usually sometimes you'll inverse this fair value gap, right? And then you're gonna retrace down into something probably like a bullish fair value gap, right? Because when we come up, we form bullish fair value gaps as we go higher, right? So maybe price actually formed a bullish fair value gap as well and inverse the bearish fair value gap, right? Now you start seeing new support develop, right? And you start seeing that we actually might continue to the upside because we also activated our market structure shift, right? Probably on the smaller time frames, you'll also see a market structure shift somewhere right here too. But those higher time frame confluences or the higher time frame market structure shift, they're more stronger and they'll actually point you to the direction where you're actually gonna go, right? And that's basically how you catch the reversals, right? You just wait for a liquidity sweep, see new support develop, and then continue to the other side. All right, so now let's basically start kind of putting everything together, right? So let's actually kind of go on the small time frames. We already marked our draws and liquidity, right? So as of right now, we're waiting for one of them to get swept. Right here, we saw this liquidity get swept, and as well, all these other liquidities right here also got swept. These are all draws and liquidity as well, but the ones I mark are basically like the obvious lows, right? So we have like an obvious low here and an obvious low right here, and we also have another one right here, but we're really not close to that. But if we don't see like support develop after taking this low here, then we might actually go to down. We could actually go down to these draws and liquidity and continue lower, right? All we gotta do is just be patient, just wait. It's fine. You'll eventually see the support develop and the confirmation to the upside, right? So now, as of right now, we see a liquidity sweep here and we see a fair value gap here. Where if we inverse this, then we could validate our liquidity sweep, right? And we could see the potential highs get taken. So we could see this high get taken, right? And then we just want to see more support basically develop, right? So as of right now, this is a bearish fair value gap, right? So if price were to continue lower, right, you will want to see this get respected and push more lower, possibly down to here, and all that shit, right? However, I was just waiting for the upside, right? There was also an SMT that I could explain in another video, right? There's a lot more things in trading than just this, right? But we just see what price does here. We inverse that, we retrace into the inverse fair value gap, right? We retraced like twice, right? So then from here we were able to like take our longs, right? Your first take profit will be up here, your second take profit will be here, and then your third take profit will be here. Candle close underneath here, and obviously once you get your first take profit, you want to set your stop loss all the way to like break even, right? Or in profits, right? The thing is, once you actually hit your first take profit, you got to keep dragging your stop, right? Because these take profits are take profits for a reason, just because these are draws in liquidity. And again, what did we see right here when we took this draw in liquidity? We saw a turnaround, right? So these are take profits because these are areas where we can see the turnaround, right? And again, you want to see fair value gaps be formed, and if we retrace to those fair value gaps, we want to see those fair value gaps get respected, right? So we see now bullish fair value gaps being respected, right? Or being formed and respected at the same time, right? And then eventually we come all the way to the third take profit, and that's how we were able to catch the upside, right? When we were basically downtrending, right? We created inverse fair value gaps, right? Let me actually mark this real quick. We created inverse fair value gap, we created bullish fair value gaps as well, right? And we basically kind of activated our market structure shift right here, right? On our higher time frame. You could have also marked it all the way down here as well, right? This would just be on the lower time frame, but again, the stronger market structure shift would be on the higher time frame, right? And we got to kind of close above here, right? And yeah, this actually kind of ran all the way to, I'm not sure where, but it just ran. I'm gonna basically be going over another example, right, where we have a liquidity sweep from up here and then we actually go down, right? So from here we have this high as of right now that is being taken, right? We could continue higher, obviously, if we respect the fair value gaps, possibly to these draws on liquidity as well, right? But as of right now, this is what we're on right now. We're not really like all the way up here. This could have been also a liquidity sweep too, but let's just kind of focus up real quick on what's in front of us, right? So right now we don't really see any fair value gaps, right? We do see a 10-minute fair value gap here, right? So we can mark that here. And if we get a 10-minute fair value gap, inverse fair value gap, right? Where again we have to wait for this candle to close on the 10-minute for this inverse fair value gap to basically validate, right? We got that, and we got to retrace into it, right? Fuck. My fault. Um, yeah, it kind of moved quick, right? You got that. You got to retrace into here, right? And then you got to retrace into it again, right here. So you got two entries already, right? And then right there, you see that you wicked it. As long as you don't get a candle close, the setup itself is still fine, right? And you gotta like hella fucking entries in here. Honestly, this would have been a while for this trade to actually hit, right? But the point is, you got entries here, you got an inverse of a fair value gap, and your stop loss would basically be a candle close above. What are you going to target? Basically, draws in liquidity, right? So it will be here, and then potentially here, right? And then here as well. Basically, liquidity again is just your lows, right? The wicks of the lows, and that's it. Or the wicks of the highs, right? And then just target down, right? And then again, you want to inverse bullish momentum to continue lower, right? So as of right now, we didn't really, or we got a little tiny inverse, but pretty sure it's because of the way I marked it out. Yeah, we did have a little tiny inverse here, but it really didn't close like fully, right? But the trade itself, I'm pretty sure was still valid, just because we were still holding underneath the inverse fair value gap on the 10-minute, right? Then we could see how this trade actually played out. We were able to take this take profit, right? And then I'm pretty sure right here is where we actually had our turnaround, right? And once we actually have our turnaround, you could also play some upside, right? However, I'm a one and done, right? So I just see this downside and then just play the downside. I was able to take basically all of this right here, right? Going over the indicators, right? So the only indicators I ever used are the EMAs, right? So what an EMA is basically exponential moving average. So basically, I'll show you guys what that is right now. It's basically just a line that kind of just highlights the moving average, or not highlights, but that kind of just shows like the moving average of like the trend, right? So obviously, the ones I use are the 9 EMA close and the 21 EMA as well, right? So then from here we have two lines kind of like this, right? And basically it's just kind of like squiggly lines that kind of like show market trend, right? So obviously this is like the only indicator that I use. Um, on the higher time frame, you could also get that like higher time frame, like better confluence, right? But what it is basically once you start getting EMA crossing to the upside, right? Then you could take some upside, right? Right here, we could actually kind of see a setup develop, right? We could see we swept like all these lows here, right? And then we saw like an inverse fair value gap as well, right? Pair inverse fair value gap, and you also had a bullish fair value gap, right? So now you're seeing support, right, towards the upside, and you're seeing your EMAs crossing to the upside, right? So once these EMAs cross above, then you could kind of just ride it along until they cross down, which actually this is when they cross down, right? Then it's just ride to the downside, but when they cross up, it's just a ride to the upside, right? And then you'll have your market structure shift right here, right? We kind of swept it, and then after like this candle right here, we actually activated our market structure shift, right? So from here, this was actually kind of like a reversal play, right? We swept these lows, right? We got an inverse of a we got a inverse fair value gap, right? And then we got a bullish fair value gap forming, right? We also got our 9 and 21 EMA crossing to the upside, right? And then we just kind of ride along, right? Just make sure like none of these candles close underneath it, right? If you get candle closes underneath your 9 and 21, then that's like a sign of weakness of your trend, right? And you could just follow this through, right? Because once they do get a candle close, right, then you could see some possible downside, right? In this case, we could kind of see this bullish fair value gap get inversed, right? So we can see that get inversed. We can see a bearish fair value gap form, right? And then your market structure shift would actually be somewhere like shit. You could mark it right here, right? Market structure shift here. Your higher time frame market structure shift would be somewhere right here as well, right? But the most obvious low would actually kind of be like right here. It's kind of small, but it kind of works in the meantime, right? So you got your market structure shift right here, right? You got an inverse fair value gap, and you got a bearish fair value gap that you eventually retrace to, and then you got your EMAs crossing to the downside, right? And now all you really want to do is just see bearish confluences be supported or be formed and be supported, right? To continue this trade to the downside, and then target the lows, right? And keep breaking those higher lows from the previous trend, right? And this you could have caught like a sell off here. We also saw like there was actually a liquidity sweep here too, right? All the way right here. And that's basically how I break down market, like kind of like with these confluences, right? They're pretty simple, right? Um, Obviously there's a lot of other things that go within my trading, right? So not just these, right? But if I were to talk about them, this video would be like hours long, right? But this is just to kind of like give you guys that push, right? For you guys to actually understand everything, right? And how I view the market and like all that shit. But just right there, you could have seen how you could have caught plays to the upside and plays to the downside, right? Just again, liquidity sweeps being again seeing the liquidity sweep, then you see support develop, and then you start seeing a change of direction with the market structure shift, right? And then take it to the upside right here. Again, same thing, liquidity sweep, right? See inverse fair value gap, right? Or bullish fair value gaps getting inversed, right? See bearish fair value gaps being formed and be respected, right? Take it all the way down, then keep taking these previous higher lows, right? And then going lower, right? Eventually you're gonna stop, right? And then eventually you're gonna, yeah,